Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Monday, we will be waiting for the following economic headers to be released. There are so many important economic headers to be released from China, Europe, and UK. Pay attention for them, and we are waiting from the United States for two important economic headers: the Chicago Purchasing Manager Index and the Dallas Fed MFG Business Index. That's all for the economic calendar, all to be considered as market movers. We'll move on now to the numbers. On the last trading session of a Friday, we have had a trading range from 1486 to 1507. Numbers are rounded and the market is closed. Gold spot printed a close price above 1496 in the last trading session of a Friday. The number is rounded and the market is closed. Gold is trading in a bullet trend above its all daily simple moving averages except the 20 days and 50 days daily simple moving average. And in terms of momentum, the momentum is weakening. For the RSI readings, we are normal on all the charts with 68 weekly, 69 monthly, and 48 daily, and so support seen at 1493 followed by 1486 and 1483, and for the resistance 1500 followed by 1503, 1507, and then 1515. That's all for the numbers. We'll move on now to the trading strategy. If we are looking for a very simple definition of risk, it's a situation which involves exposure to danger. And to make it clearer, being extremely nervous about warning someone who lives in the jungles of the Amazon about the underlying danger of using electricity and electrical devices, while his or her lifestyle does not involve the use of the electrical devices, is a waste of time for both parties. But since most of you guys are traders, and by title this video is about gold, precious metals, and forex markets in general, it's important for you to understand the underlying danger of trading derivatives and the link between the precious metals and other markets. And to get to the point, when gold is in a rally and the precious metals in general are in a rally, this means that traders are selling off their positions in the risky assets, which includes equities, industrial metals, even also currencies. This is all called as risky assets, and they are putting their money into safe havens. On the other hand, when gold or the precious metals in general are in a sell-off, this means that the traders got appetite for risky assets and they are selling or trimming off their positions in gold and other safe haven assets and buying the above mentioned class of assets. Gold is mostly used by traders as a hedge or as a safe haven, and when markets, the risky assets here are excited about something, and they are excited now about the trade deal with China. Gold usually loses ground. We are going through an interesting month where gold could decline to 1450 or even 1400, more precisely 1410. Then it will rally back to 1600 or 1650. We will now talk about the reasons behind such a move, but first of all we will have a look at the technicalities. Technically, gold is trading right now below its 20 days, 50 days daily simple moving averages. From a technical standpoint, the road now is clear toward 1450, and any attempt to rise must find resistance about 1500, 1503, 1507, and 1515. But keep in your mind that gold could rally to 1525.7. Don't short gold before it closes below 1490, and avoid selling silver as it's obviously outperforming. Though I am aware that there are calls about selling silver into the market, but this is at least my point of view. For BTC, I see the BTC Bitcoin has to go first to 6,000 or 6,500 before attempting any meaningful recovery, and the crude oil, since we closed the gap and we closed below 56.43 but above 55.5, expect a one leg down, could reach to 54. Anyhow, avoid shorting, buy it for a rally to 58 to 62. That's for the crude oil. Please note that I'm still bullish at gold, and I will be always bullish at gold because of fundamentals. As long as central banks around the world are easing their monetary policy and lowering their interest rate, gold has one way to go, is up, then up, and more up. What we are having right now, the pause in the rally, the decline in the price, is caused because of that traders does not have enough clarity if the Federal Reserve Bank is going to cut interest rate further by end of October. I believe they are going to cut the interest rate one time by end of October. So that's why I'm saying that gold could decline to 1450 because of the excitement about the trade deal and a rally that could start in the US equities following the updates on the trade deal between the United States and China. But any rally that is going to happen is going to be a short-lived one. And after that, if the trade deal happens, as I said, there will be a short-lived rally. If there is no trade deal, there will be a crash. Both cases, there are going to be a crash because the PE ratio in the stock equities of the United States is not takeable. There is too much inflation. The stock market is inflated, and it's going to need this correction. And this correction is going to boost the price of gold and silver. So take advantage of the dip and accumulate both gold and silver for a rally that could reach to 1600 or 1650 on the back of the collapsing equities. However, as I said, this is my point of view. I know, I am aware the market is full of calls about shorting gold and longing silver, or longing gold and shorting silver, or shorting both of them. Okay, I have been hearing this since gold was 1350 and 1400. I'm not convinced, because I will change my mind. I'll become bearish when I hear Fed Powell saying that we are no longer interfering, we are no longer easing, we are going to hike rates. Then I will immediately short gold, the first one. Before that, I'm not doing any shorting gold. That's all for today. Thank you guys for watching this video. I'll see you tomorrow in another video.